All right. How we all doing today? Who's making some money? All right. Give me some ones up in the chat. If we making some money. Give me some twos up in the chat if we are neither red nor green. But we want to send this puppy green by the end of the day. And give me a 3 up in the chat if we are red. And we got to send this puppy north. For show. Alright, let me get my website ready for y'all to see. What's going on, JC? How you doing? Making some money today, so that's a good thing. Okay, let me get this big enough for y'all. Yep. So wait for that to load. Alright. So let me know when y'all are ready, because I'm going to go through this real quick, and we're going to move on. But this way, you know, y'all can at least see it for now. What happened with XELA? Which company is that? Oh, okay. Look at that really quick. Okay, not holding anything right now. Not a bad call. I think we may have found the bottom though. Things are turning around today. I said we probably have a day to, you know, catch our breath as people start to feel more certain with the stimulus being passed. It's going to create certainty. People are going to start spending more money again, and you know, so on, so on. But we would have like a little day or two buffer, is what I said, in between. You know, when it passes, because it passed over the weekend. So I thought we'd have Monday for people to kind of sit around and see what's going on, sit on their hands a little bit, and then you know, stocks start running. So I think today we're starting to see them kind of run again. And then, you know, rest of the week, I think people are going to catch back on. The people who went away because they're losing money. Oh, well, stock market's back on again, guys. I think that's where you're going to start to see people really dump their money into the market and make these prices explode again. Let me throw this in here for them. I'm going to throw this in my due diligence real quick. And then let that, give them like a minute or so to join. All right, there's that. Bring that over here too. Alright, JC, looks like it's your lucky day. Let's go through here. Scroll down to the bottom. So yeah, you're going to go to my website, JC. Here's the link. There we go. Let me pin that for you. Okay, so that is where you're going to start, JC. Now, once you're at the home page, you're going to go ahead and scroll down to the bottom. Go all the way through there. Alright, to the bottom. So where it says down here in the footer, you got privacy policy, terms and conditions, sitemap, and then log in or create an account. So we're going to click on login or create an account. It's kind of low because I've just got too much going on with the computer. Alright, let me log out of this. Okay. Now that I'm logged out, let's do that one more time. So you're going to go to create account. There, you're going to fill out your information, whatever you want, whatever email you use, whatever you want your, password to be, all that fun jazz. Oh, sorry, this is your username. This will be your email you'll use, and then whatever you want your password to be. And then you'll click on sign up. Eventually, you'll go back here, you'll be able to log in. And when you click log in, you're going to be met with this screen. So this is going to be our public companies. This is going to be our SPAC merger companies, the ones that have been announced. And then this is going to be the OTC companies. Now this one's very limited because it's only 2. I prefer not to do OTCs. But, if you click on any of them, oops, let me go back over here. Go to my SPAC merger companies. Go to any of them, these will be updated automatically every single time that this sheet is updated. And yeah, it's not as nice as I want it to be. I'm still working on improving it, but it's not super important in the very beginning. If you've been involved with any software kind of company, and for me with starting companies, when you release a product to the market, you're just looking for your MVP, right? Your minimum viable product. And like I would have ideally spent more time on this, making it super pretty. I have something that will be a very enhanced version. I'm just waiting to hear back from this company's software team, where you'll be able to click on these header rows, and you'll be able to click ticker, for example. It will sort it automatically. In the meantime, I have this sorted in alphabetical order automatically as well, because it just connects to the spreadsheet that I update for y'all every day. Let me make sure that this is not. Yeah. Okay. So I can update this to sort alphabetically. These are the last 3 that we did yesterday. NHIC. You can see that the rows aren't formatted how I'd like them to be, or the columns. I'm sorry, they're too narrow, but I can't adjust the width right now. So we'll do that eventually. But yeah, you can just scroll through there. You can see everything. I want this box to be wider so that this information isn't like just jam-packed on top of each other. And ideally, I'll have like a search feature in here for y'all as well, to where y'all can search, like say you want to look into that one company we're talking about. Oh, what was that company? Matterport. Okay, I'll type in Matterport, and then it will only, it will isolate this ideally. So I'm waiting to hear back from that company first to make sure that this is within the capability, because the current spreadsheet we have, like for SPACs, for example, I don't know if it was an error from their company or if I have to pay for their paid plan, but it only goes to row or column Z. So we get cut off right here, and then beyond there, it's like we've got, well, Catalyst info, we've got Catalyst dates, and we've got additional notes, and now you've got nowhere for, you guys aren't going to see any of that stuff. And for the public sheet, it goes even further. It goes all the way out to AS, I believe, is the row. So you can see how much gets cut off. It gets cut off from here all the way to here. So I'm working with the company right now, see what I can do with them, make this a better experience for y'all, again, for free. If they're going to make me pay for it, I probably won't pay for it right now, to be honest. But at least this way, y'all can see it in the interim while I'm waiting to hear back from them. And then I'm also talking to a few people within my network who know how to code and do custom code. So if we can do, anything with custom code on here that would make this a better experience, that would be even better. But in the interim, y'all can go on there. Anyone tuning in right now, all you're going to need to do is go to my website. I've pinned that for y'all, growthsaloon.com, name of my company. I do online marketing, so it's completely unrelated from what you're getting on here. Typically a no-no, but I needed to host this somewhere so that y'all could get access to it, because y'all are dope for tuning in every day. First and foremost, I appreciate that. But people have been asking, I've been working. This is what I'm going to put out for right now, and then we're going to continue enhancing it and making better in the future. So yeah, you go to my website, growthsaloon.com, scroll to the bottom, click on log in or create an account. If you don't have an account already, which you probably don't, create your account. It should either log you in automatically or just, you can log in manually if it makes you. And then, yeah, once you get there, you're going to get brought to this screen, and you'll get met with these links. This is going to be public companies. This is going to be SPAC companies who have announced mergers that have not merged yet. And then this is going to be our OTC companies. This one's going to be very limited because I don't typically do financials on them just because they're not usually good financials. I'm not too helpful there, to be honest. But yeah, SPAC, public companies, you guys will get a lot of value out of those sheets. But yeah, just know that I'm working in the background now vigorously so that I can make this sortable for y'all, and more aesthetically appealing as well. But at least now you've got your information that we go over on here that you can access, whenever. It doesn't matter if I'm live, doesn't matter if, it's 3 in the morning, you got it at your disposal. So there y'all go. Let me know if you have any questions as well. Like I said, I'm always accessible to y'all. Reach out to me on the Discord, hit me up on any of my social channels. My links are in the description below. But this is all for free. I don't know how long I'm going to keep it free. Y'all in the beginning, whoever joins first, you're never going to have to pay. It's just when my server capacity starts to get reached and I have to upgrade my servers, and then it starts costing me money to provide this for y'all, which I want to do for free as long as I can. But when I have to start paying more money, that's when I'm going to put like a paywall up for anyone else who wants to have access to this. And I don't know how long it's going to take us to reach that, but y'all will never have to pay. Just know that. So yeah, there it is, folks. With that being said, like I said, hit me up if you have any questions at all. Not too hard to find, and I will get back to you as soon as humanly possible every time. But yeah, I'm going to go ahead and exit out of here for right now. We're going to start diving into some due diligence. Anyone who missed this, I will have to probably walk through later if they want access. Let me click out of this. Let me click out of this and pull up our sheet. Let's see. Catch up in chat. Oh. Kayak, thank you. I appreciate this. JC, thank you. I appreciate that as always. You are the bomb. Savvy, thank you. I appreciate you as always, my friend. Let me go ahead and I'll pin your comment. Alrighty. And Connor McNerney, how you doing, Mr. McNerney? How we living today? How's our port looking? How's GME doing? Maven Marketing Group, great to see you here. Maven Marketing Group, you guys made my website. You guys did not make that page though. That was all me. I figured it out. If you guys want to make it better, though, that'd be greatly appreciated, because my web design skills are limited. All right. So these are these specs. You guys want to talk about public companies right now? You guys let me know what you want to talk about. I don't really have anything on the docket today. Just wanted to show you that in the beginning. I'm about to go on a SPAC hunt like we did yesterday. Find some new companies to enhance our portfolios with. Let me pull this one over here. Unless you guys have any earnings reports that came out. I haven't done an earnings report in forever, it feels like. So, would love to see any of those who have dropped recently. But actually, let's start today with that. I'm gonna do a couple. Try to brush through a couple of these just to jog my memory on what public companies do. Let's see what happened yesterday. We had reports for these companies. Lincoln Electric, okay. Pfizer had their earnings report today. We can look at them. We can look at McDonald's, 3M, yada yada, JetBlue, Harley Davidson, Sherwin-Williams, and LabCorp. I'm gonna look at Pfizer's. They had to have gotten a lot of money, right? Not on their website yet. What's this? Oh my god, this is from the week beginning July 27th. Y'all didn't say anything? Alright, never mind. Never mind about Pfizer. This one. Load. Alright, so this is the right one now. For those of you just tuning in, we did already go over the access to the spreadsheet, so if y'all missed it, let me know in the chat. And, if we have the time in between going through this, I'll let you guys know how to access that. I tried to hold off as long as I could for y'all, though. Xeris, that'll be good to look at. Let's see, Wish, Shift, Mohawk. Any of these stick out to y'all? What do y'all want to do? I'm going to do Xeris, I think. Yeah, I'm gonna do Xeris. Nope. Oh man. Del Taco. We could do Del Taco. Let's see what they filed here. Not enough for us, I don't think. We have consolidated income statements here. This will be Q4, year to date, sales. So maybe we have enough. Yeah, we can do this. Alright, let's do Xeris, and we can do Del Taco next. I'll pull this over here. Exit out of this one. Alright. So now my Xeris. Let's get going. Xeris. They are a pharmaceutical company. Currently trading for $4.22. Closed yesterday at 472. Market cap is $209 million. My buddy works here. He said that sales have been off the charts this past quarter. So we'll see if he is telling me the truth or not. All right, we'll do our balance sheet first. This is going to be in thousands, so we'll add 3 zeros at the end. End of last year was 108,987, 123. Liabilities, we're looking at there we go. So we're financing it mostly on debt, it would appear. Anything above 0.5 over here is going to be financed mostly on debt, which is okay for the sake of growth, but you know it is a bit riskier of an investment if they're financing on debt versus our equity or our shareholder equity. We'll see what our current ratio looks like though in terms of liquidity. So it looks like we're mostly liquid. The current assets, folks, if you're just tuning in for the first time, current assets are anything that can be liquidated into, just liquidated in under a year. Anything that takes longer than a year to liquidate, such as, big property, equipment, whatnot, those are typically listed under, or they're not going to be classified as a current asset. So they've got most of their assets you can see is liquid or are liquid, 159 mil versus 152 mil over here. Not unusual to see, but that's pretty high for liquidity. Let's look at their liabilities, though. Yeah, their current liabilities are relatively low. Those are the same concept. Just anything that's going to be due in under a year is current. So that, anything above 1.2 when you see in this column, that's considered healthy. Just like where it becomes subjective from investor to investor is, and it gets to a certain point, like say above 10, for example, where they're super liquid, they don't have issues there. It tells investors that they're not using their liquid assets the correct way, that they're not reinvesting into the business to grow it. All they're doing is, stockpiling assets. So typically, with really good companies, you'll see above 1.2 for sure, but like 1.2 to 2.0, that's where, they typically tend to float. But we don't want to get into subjectivity here. We're looking at these numbers for objective investing. All right, stockholder equity, 33 million, which is up substantially since end of 2019, up by almost $20 million. Preferred equity, don't see any on there. We'll find that last. This is going to be for, I believe this is their 2020 annual. Okay, we're going to look at their income statement. What did we do? What was our top line for the fourth quarter? We did, it's going to be in thousands, yep. So we did $7 million in Q4 sales, which was up substantially since Q4 2019. We did $1.6 million. Let's see, year to date, we did $20 million in sales for all of 2020 versus 2019. We only did Q4 in 2019. Here we go. Relatively new company, it looks like. Net income, that's going to be our bottom line, so it's going to be net income, net loss, is reflected in parentheses on the sheet. So our net loss for Q4 was 21,857,123, and our net loss for Q4 2019 was a lot of money. You'll see what this says for our profit margins, though, because our numbers are going to be different profit margins, but you want to keep an eye on here. It's going to be year to date. So for the full year, we lost 91 million. And previous year, we lost even more money. So we increased our profit, we increased our numbers by, why is this reflected as that? Oh, here's what we'll do. Money. Boom. It's not money still. That should be good. Okay, look at our profit margins, though. This was current Q4, negative 300%. Not great. Definitely not what you'd like to see as an investor, that we are that unprofitable. Well, yeah, I haven't seen profit margins that low in a long time. Sorry, brother. Yikes. Year to date, though, they did negative 452% for profit margin. Over here, we did negative 2,000% the year before. So they are improving in the right direction, which is what you want to see as an investor. But, it's a highly unprofitable company right now. Go ahead and I'll post in there 8K for right now. They'll release their 10K probably later today, which is going to be the same information, just going to have like a big report attached to it also. All right, notes. Highly unprofitable so far. New company. VHC. Yeah, is VHC, is that public savvy or is that SPAC? Yeah, I'll do that one next. Let me write it down really quick. Or not next. I'm gonna do Del Taco next, and then we'll do that one. So let me write this down. We got VHC. And they are phonetics. Okay. All right. So we got that profit margin. I don't know why these are so condensed, but I'll worry about that later. All right, let's do Del Taco. Ooh, suing Apple for using their product. Wow. That'll be good to include in the notes. I'll put that in there for sure. Del Taco. Let's see. Del Taco stumps. $11.14 is the price we see. Taco is theirs. That's awesome. 14 was the price we saw, and that gave us a market cap of 400. I'm sorry, let's do last close first. 1096, and that gave us a market cap of 416 million and change. Oh shoot, we did not finish Xeris. I didn't get their outstanding shares. Give me 1 second. So this is going to give us our book value per share and our price to book ratio. There we go. We did 53, 505, 197. That's how many shares we got floating around. And that gives us a book value per share of 63 cents, which means we're trading 6.5, almost 7 times the book value per share. Anything below, if it's your first time tuning in here, anything below 1 is considered to be 100% undervalued, such as what we saw over here with KHC, under 1.0 ratio. Not, it hasn't even, the market price hasn't caught what our book value per share is, which is just our total shareholder equity. Over there, assets are always going to be equal to liabilities plus total shareholder equity on the balance sheet. So that's why it's good to have a lot of assets and very low liabilities. It makes our equity in the company worth more. Now you take that, you subtract preferred shareholder equity. They didn't have any preferred shareholder equity, which is good to see. And you divide it by the total outstanding shares, and that gives us our book value per share. So for KHC, they were trading at $37.68 when we did it. Their book value per share was $40, almost $41 over here. So we were trading above, we were trading below what our book value per share indicated. So it's 100% undervalued. Now, anything below 3 is typically considered to be undervalued as well. If you're value investing like myself, the market just hasn't caught it yet, and they're a good company. So yeah, that price should catch up eventually. And here you're seeing that we're at 6.6, almost 7 times the book value per share. So that would typically indicate that it's a fully priced stock already, or it's, overpriced stock. I don't think it's overpriced, but I do think it's fully priced right now. So we'll have to keep looking for their next reports over there. Let's get back to Del Taco though. Let's see filings. Let's see if their 8K has what we need. If it doesn't, we won't be able to do it, unfortunately. Usually an 8K, like around this time, is just going to be a very consolidated version of their annual report, which is okay, or their quarterly report, which is okay. Let's see, they got some highlights in there. Do they have our numbers? If they don't have our numbers, we can't crunch them just yet. All right, we've got numbers. We got assets, we got a balance sheet, do we have the income? Yep. Okay, so we're gonna do Del Taco and then we're gonna do Your Savvy. So our assets. It's gonna be in thousands. Okay, 747, 309, 123. A lot of assets for a taco stand. So assets previous year ends, we are down substantially. Del Taco is down big this year, folks. $115 million have been eaten away from their assets. We're about to find out why, I'm sure. Liabilities. Liabilities have been reduced, but not that much from that number. Or that's what we see today. This is what it was at the end of 2019. We only reduced our liabilities by 25 million. Our debt to asset ratio 0.72, so we're financing mostly on debt over there. You see what happens when you do that, the assets get eaten away. Let's go look at our current numbers. 19,747, 123, and then current liabilities are very high, so we are insolvent right now, it would appear. Yeah, anytime that number is below 1.0, that indicates insolvency when it comes to currents. That is not what you want to see. Same over here. If this number is above 1, that is insolvency, because the liabilities outweigh your assets. Not good. Not a secure investment. We're not trying to lose money. We're not trying to gamble away money in the market. We're trying to find good companies that are undervalued, that haven't been noticed yet, and we're going to buy them before everyone else knows. That's how we make money here, without risking money. You're always risking money in the stock market, but we want to make the safest bets possible. The worst thing you can do as an investor is lose money. It's just an uphill battle from there. All right, shareholder equity. We're looking at 212 versus 302, 107. We'll do that last. Let's go see what our reporting period is. I believe this is going to be their annual. Yeah. Annuals. Revenue for Q4 in thousands was this number. Previous year, same period, was this number. So we were down not that much, $375,000, not that much. How about for the year though? Let's see, we did this. This is more substantial. $21 million is what we did. We were down compared to the year before. Let's see if our expenses increased. It would appear they did. No, our expenses went down. So where did our money go to? All right, well, let's look at our bottom lines. Q4, we profited $7 million. Year before, we lost $114 million. That's a, oops. $114 million. So that is a $121.6 million swing. Not a small deal for sure. That would indicate we're going in the right direction, though. Why are we losing so much money from our assets, though? That's what I'm wondering. There it is. It's for the full year. So we went $28.5 million in the right direction when it comes to net income for the full year. Look at what our profit margins are. Q4, we were at 5% profit margin. Q4 2019, we were at negative 73%. Full year 2020, negative 18 versus negative 23% over here. So I'm wondering where the money's going now. Operating expenses were substantially lower than Q4 2020 compared to the rest of the year and Q4 2019. How many shares we have floating around? We've got 37 million shares floating around. These should not be like that. This should be number. Let's push this in. There we go. That's going to give us a book value per share of $5.72. It's trading for $11.14 today, which is under 2, so it's under 3. So this could be a undervalued play here, Del Taco, ironically enough. What I would caution against, though, is, while these numbers are in our favor, our equities in our favor, Q4 numbers are in our favor, they're financing mostly on debt over here, and they are insolvent when it comes to their current assets. They are far outweighed by their current liabilities. So, yeah, something to keep an eye out for. I'll put that in my notes over here. But as far as value plays go, they are currently being undervalued by the market per our typical rule of thumbs. This sheet is sensitive. Put that link in there. That's the other thing that you guys won't be able to have with the sheet on my website right now. I'm working on that. Is that it's not clickable. The links aren't clickable. Once the software provider gets back to me, though, their program does allow it to be clickable. I was using it last night. It's just, it just cuts off the information too soon. Notes. go. There's Del Taco, folks. Let's do your savvy. Alright, what is this? VHC. Let me know if y'all have any questions as well in the chat. I'm happy to answer anything for y'all. I know, if you're just tuning in for the first time, especially, a lot of this might be very foreign to you. That's okay. Here, just ask questions. Don't be ashamed to. I'm here to help guide y'all, so that y'all can hopefully learn this quicker than it took me to learn this. I'm an online marketer, not a financial advisor. All this is self-taught, but it's taken me a long, long time to learn any of this. So I'm not a numbers guy either. I majored in history in college, minored in philosophy. Not do the numbers. In those classes, I did not do well. The number classes. Fortunately for me, my father's a financial advisor, so I grew up around numbers a lot. I'm also Jewish, and Jews genetically are really good with numbers. So that's I think all that saved me. So there you have it. For NetX Holdings. Okay, so it looks like our last report was from November. They should be releasing something relatively soon, Savvy. Let's look at November for you, though. So I think this is their Q3. Happy Hanukkah. So it's a little bit late for Hanukkah, but thank you. Alright, let me pull this over here. And then we're gonna, after this one, I'm gonna probably dive into some SPACs. It's a little bit early for Hanukkah. Yeah, I guess that's one way to look at it too. You crack me up, Savvy. It's a software company. Updated here. Let's go look at their filings. They closed at 588. Market cap at 619 is $439,850,000. Look at those numbers soon after we do the rest. Total assets, these are going to be in thousands, so we'll add 3 zeros at the end. If you guys have never looked at these sheets, by the way, this is what I'm talking about when I say these numbers are in thousands. You always want to look up here to see what they're in. If it doesn't say anything, you can consider these numbers to be as is, but sometimes it will say in thousands, so we'll add 3 zeros. Sometimes it says in millions for the really big companies like Tesla, Amazon. We could do Amazons maybe after this if you guys want to. And yeah. You want to know exactly what it's being calculated in, though. So the last thing you want is to have raw numbers and raw numbers that are off by a lot if you're not accounting for what they're telling you to account for. So this is in thousands. We'll add 3 zeros here. 258, 545, 153. End of 2019. We're looking at this. Liabilities, we are here. Previous year's liabilities are over there. So liabilities are going up, but they're growing as a company. That's expected. When a company is scaling up, it's a good thing. You can see that they're financing mostly off of shareholder equity. They must have had some sort of offering, I'm assuming. But we'll see that later on in the sheet. Now let's look at our liquidity. Yeah, you can typically tell that there was an offering of sorts when this number is really close to this number, because they have all this newfound cash that they didn't have before. They just haven't spent it yet. So they're very liquid as they look into growth. Right. Yep. All right. Also, their current liabilities. They're probably gonna be pretty low. Yeah, they're right on par with this number over here. You can tell all this is debt that's due in a year or less. All of this are their assets that can be liquidated in a year or less, typically mostly in cash. Yeah, their cash and cash equivalents is like 226,000 or 26 million. So they definitely had an offering, if I had to guess, without knowing for sure. Okay, you can see our current ratio is above 8. It's almost 9. Typically meaning one, you don't have to worry about insolvency over here as you do with this company. When it comes to liquidity, they have more than enough liquid assets right now to cover their expenses and then some. They're not strapped for cash, to say the least. So yeah, there's what you got there. Let's look at their equity. Our equity is going to be pretty good. Pretty good. 230 million. Always going to be equal to the assets. Remember that. Assets equals liabilities plus shareholder equity. So we want our liabilities to be low compared to our assets. Alright, previous period, we were sitting here, indicating that yes, we did have an offering. Savvy, can you get me information on an offering that they had this year while I'm filling this out? For shareholder equity is 0. Beautiful. Now we're going to zoom over here. This is for Q3 2020. Scroll down their sheet. Looking at our revenue. These are going to be in thousands also. So Q3 we did not a whole lot of revenue. We're going to be pretty far in the red if I had to guess. Q3 2019 we did even less money in revenue, only $4,000. How about for the full year? Full year, on the other hand, wow, where did all this money come from? But you can see we did $50,000 the year before, and then over here we did 302 million for the full year, so we must have had some big deal. Net income, this is our bottom line after all of our expenses are paid for. Employees, salaries, everything's paid for. Q4, we lost $4 million. I'm sorry, Q3, we lost $4 million. Q3 2019, we lost almost $5 million. Thank you, Savvy. I'm going to open up that in 1 second. Then no offering settlement. Okay. Take a look at that. Year to date, There's your outlier again. Profit margins are going to look just absurd in a second. Negative 15,500%, negative 123,000%, 95% profit, negative almost 30,000%. Yikes. Put this link in here. I'm going to open up yours as well, Savvy. Put the outstanding shares in there, and then I'm going to open up your links. Oops, 71059 23. Yeah. Okay, let me open up your reports real quick. Drag. Let me drag you over here. Come on. Why is this crapping out on me now? Savvy, you have successfully crashed my computer. Whichever one of these reports is trying to load. There's just too much going on the web page. There we go. All right, we are out. Beautiful. It is not a MacBook. I do not use Mac. It's a HP, not old. It's an HP Spectre. Let's do this. There we go. Much better. Foreign firm has refiled its complaint with the United States ITC, alleging that Apple is engaged in unfair trade practices that infringe one or more claims of their patent. Okay. Put this over here. Currently suing then let's open up some of these other links you sent. Block. That's RTT News. See if I can copy this link. Nope. Berg. Copy link address. Nice. Okay. Oh, so it has to go through a YouTube redirect. That's why it's getting slowed down. Okay. May 20th, 2010. Okay. Patents. Owned. Go ahead and get that link again. Boom. Oops. Nope. Don't want to do that. Now I want to do that. Let's see this one. I think it's the last one you sent. Copy link address. Ooh. Savvy, you might be onto something here, my friend. This person's spot on also. If the tables were turned, Apple would be running this company into the ground. When I went to school, the reason I majored in history is because I wanted to get into law. That's why I also interned at a law firm while I was at community college. I went to community college, full-time student there. Worked as a server at TGI Fridays with our boy TC for 3 years, full-time. I would work 40 hours a week there. And then I would also work at a law firm for 16 hours a week. In addition to that, only got paid for 4 of them, but I just wanted to learn. Just be hungry for knowledge. You know, if you're hungry for knowledge, those who are interested become interesting, is how the saying goes, I believe. So, you know, I just wanted to learn, you know, get some exposure. I had no experience. I didn't care what I got paid. It was just fascinating to me. I wanted to be a patent attorney. That's what these companies do, though. You know, Apple, if the tables were turned, they would have been suing the hell out of this company until the company went bankrupt, and then they would have just probably acquired the products for a fraction of the price otherwise. Or anyway, here it's like this company's doing it to Apple, and no one really stands to do this against Apple because Apple's huge. they can just prolong this legal battle, but they have enough of these patent suits going on where they just got awarded, $200 million from Microsoft. They've got enough of that going on for it to kind of continue. So, or for them to be able, I guess, to afford to continue this battle against Apple. So yeah, this is another one that you're looking at undervalued right now on paper. Savvy, I like it. Yeah, you're looking at it should be $3.25 a share. We're trading for not even twice that right now. There is room for it to run, and if they were to win this suit against Apple, you can bet your bottom dollar you're going to see a lot of money flood into this company. It'll be big news as well, and you should get a pretty nice payday. So your head is definitely in the right place. I like the way you think, my friend. Let's dive into some SPACs right now. How about that? If you're going IPOE, this is good to see. If you guys have been watching burner market trading since December, I've been saying I like Payoneer a lot. Follow the money there. Yeah, this is cool. We're not trying to trade trending SPACs. We're trying to find them before they start trending. Let's see. Frontier Airlines not going public through SPAC. DocGo is a leading provider of last mile telehealth. Yeah, this is what you're going to see. You're going to see Tesla just as quick as they fell. You're going to see Tesla run back up. I saw some dude last night on Twitter bragging about his Tesla shorts and how they're starting to pay off now. I'm like, yeah, you better hope that the market actually was going to crash, because if the market's not crashing, which I've been saying, I told y'all for over 2 weeks now, if the market's not crashing right now, they're going to keep putting more money, or they're going to keep pumping more money, and it's actually healthier than we think, into the economy. Inflation levels are very healthy right now. As long as they keep pumping more money in the economy, put money back in the economy. That's just how it works. It's more certainty. So there was no crash. The crash is not right now, at least. And I was about to comment back to him, like, you better hope this is the crash, because if it's not the crash, your shorts are going to get burned alive. Tesla's going to go roaring again, and I think that they're, like you said, they're 15%. They're going to continue roaring, I believe. All right, so DocGo. What's the current ticker though? MOTN. Trading below $10 right now from what I just saw briefly. Just got posted literally 50 minutes ago, so y'all are seeing this before, mostly anyone on the internet. This is what we do on this channel. You have an opportunity to get into plays that nobody's in right now. You don't want to be late on the hype train. You want to get in. If you want to make money, you want to get in before the hype train takes off. Then you're going to watch this go like, that's what happened with DPHC before they became Ride. I'm no longer in that play. I sold out for a 100% plus gainer. That's what happened with GMHI when they turned into Laser. That could have been a 400%er for me. I'm still very confident that company's going to go well beyond $40, so I'm holding them long term, trying to transfer that over to E-Trade so I can transition my equity into either warrants or more warrants or whatever the case is. Get more equity in the company or maintain my equity and use the other proceeds elsewhere. That's what I'm going to do with all these SPAC plays. You have an opportunity with warrants to get in with a very minimal risk, get a lot of equity, and then when that price goes up, let's say it goes from $10 to $20, and you bought a warrant for $1, the warrant's not going to be worth, only 2x. The warrant's going to go from being traded at $1 a pop to, if it trades for $20, the stock does, the warrant typically grants you the right to purchase the entire share for $11.50 extra. Remember that. So it typically trades about, $2, $3, maybe sometimes $4 behind the share price. So if the company is trading at $20, you can expect for the warrants to come to a total price of like, 17, $18. Let's call it 18 for your total price. So you're looking at $6.50 for the warrants that you paid $1 for. Now you're looking at, not just a 100% gainer like you'd be looking at if you bought actual shares themselves. You're looking at, a 500% gainer just going from $10 to $20. Now imagine when it goes from 10 to 30, 10 to 40, or if you got into CCIV warrants in the beginning, $10 to $60 before, it finally tanked. That's a lot of money that you're going to be, you're making. That's why I play the warrant game. Just make sure you know what you're doing. Don't play games because I tell you to play them. Do your own research. But let's go into this one real quick. And it's not going to work that way. Out of the money warrants for every company is not a smart idea. Out of the money warrants are the risky ones where the stock price never catches it. Those warrants are worthless. So be careful there. I don't typically buy out of the money warrants. I usually buy in the money warrants. So the SPACs have to run a little bit before I get in. I did just start my first out of the money one with RMGB because I think that company is going to be fucking massive. But yeah, let's see. MOTN. They are trading, or they're turning into DocGo. Get this information really quick. 3/9/2021. Trading for $9.99. Closed yesterday at $9.95. No one has caught the news yet. The current market cap is 143 million. And I gotta run to the bathroom real quick. And then I'm gonna go in depth over here. Be right back. We are back. Health, last mile medical mobility services, ambulance. Addressable market of 95 billion, operates very nice, Savvy. Thank you. Close back up. We just talked about healthcare briefly yesterday. So last mile healthcare delivery services. Let's go find our transaction overview. So we know the terms that we are buying into. I appreciate that, Savvy. Thank you. Transaction overview. Okay, here's what we're getting. It's going to be our enterprise value, equity value over here. Okay, we're looking at 900 million. For the enterprise value, post-transaction equity value, we're looking at 1.1 million or 1.1 billion because we are infusing 240 million into the transaction. We are getting what percent of the pie? We're getting 10% over here. Sponsors are getting 3%. So that is what the current post-merger market cap will be. So you can see that's below the equity value over here. You know, makes sense is at $9.99. That was decided off of $10. See if we got our revenue sheets over here. Oh yeah, I don't know why they're giving us 2019 estimates. Maybe we should have actuals on there. Might just be a mistake. Alright, let's do this. I mean, 40 mil, okay. Yeah, I don't know if did they reuse this? They didn't really give us many estimates beyond here. 2020 we did 94 million. That's what they estimated, though. We don't know. I mean, there might be corrections later on. These are what they're projecting for 2021, and then 2022. You can see very aggressive growth. Let's find their CAGR. They don't give us 2023. This is just 2021, 2022, and then our CAGR calculator will tell us what that growth rate is going to be. we're starting at 94. We're ending at 267. We're going to get there in 2 years. Alright, it's going to give us this. TAM you said was 95 billion, right? Yep. Let's go find their competitors. Oh man, Savvy, you really are a dad. That was a great dad joke. Okay, so before we even dive into competitors, we can dive into our relationships and partnerships. Now we're going to zoom in real far for this one. HBO. So this state of California. Jersey City. I hate when they do logos. City of Philly, that's my city. Select Healthcare. The NFL. Good RX. Equinox, I think it's the Health Club. The MLB. Pretty impressive list, honestly. Carnival Cruise Lines. New York State. Department of Health. More impressive. Blade. Uber. The Barclays Center in Brooklyn. W Hotels. There you go. Now let's go look at our partnerships. This is what they dub the world-class partners and joint ventures. that is it for that. Let me do this. Slide 18 and 19 in investor presentation. There you go. Operating in the UK. You ever heard of this company, Savvy? Not finding any competitors on them so far. Let's see. Comparable companies. Let's see if we can find it over here. Interesting. I could see this model catching for sure. I just don't understand it enough. It almost seems like Uber, but for like ambulances, where it's like instead of having your ambulance just sit at the hospital waiting all day, you got them basically just crowdsourcing. If I understand it correctly, your same ambulance can deliver for multiple hospitals. There's no reason it needs to only go to one, right? You have ambulances that take patients to and from the hospitals in a non-emergency capacity. Why would you take an ambulance if it was for non-emergency, though? That's where I'm not understanding it now. Right. Valid point. What I tell you, Job, hang in there. Open is soaring right now and only gonna continue to soar higher. I can't remember if it was you yesterday or if it was Light Cetaphil, our other open door brethren, who said that they were buying every dip they could on open, and they just were losing so much money on it. I said, just hang in there. Do not panic. Once the market starts soaring again, the money's going to flood back into open. It's doing that today. They're probably up a shit ton of money right now. I hope you're up a shit ton of money right now, but I'm up a shit ton of money right now too. Ethereum, if we have any Ethereum friends in here, Ethereum up a shit ton of money right now. Just hit 1850 again last night. Told y'all 2 weeks ago, do not panic, my friends. Ethereum ain't going anywhere anytime soon. We're going for a nice little correction, and we're going to soar right past 2000 again, and we're going to go soaring really far. We went through a nice correction period, very healthy, multiple weeks long now, and Ethereum and Bitcoin are about to soar right through their all-time highs and go on another absolute rampage of a run. I don't know where this one's going to stop. It's going to go, I think Bitcoin's going to go past 60. I think Ethereum might soar right past 2,500, honestly. I think Ethereum will hit 10K within the next 5 years, what I've been saying. But I'd like to continue maintaining that stance because every time I have what I think in my mind is a conservative stance, it gets crushed. I said Bitcoin 10K within 5 years, 4 years ago. And I thought I sounded crazy then. It is about to hit 60K very, very soon. Bitcoin, $1 million within the next 10 years as well. Did not hear it here first, but you definitely heard it here maybe second, third, fourth, fifth, sixth, seventh, eighth, ninth, or 10th. I hope. Do I subscribe to Cathie Wood's economic outlook? Does she have like a report she puts out, or are you asking like if I just agree with her economic outlook in general? $2021, this is good news to hear. They are projected to crush their $155 million projection. I'm not familiar with Cathie's economic outlook as an entirety. You want to sum it up for me, JC, or I can go right after I finish putting in some competitors here. I can just look into, things she's been saying and see if I agree. Because I mean, Cathie, I don't get me wrong, I'm a smart guy, but Cathie is levels beyond me. So I'm very unlikely to strongly disagree with her. I might disagree here and there, but she's got so much more experience under her belt. She's seen so much more time on this planet to kind of see these. She's been through a lot of cycles. I haven't been through a lot of cycles yet. I've been very fortunate not to have to go through a lot of crashes. In 2008, that's not easy for anyone to take care of or handle. Fortunately, my dad is a financial advisor, so he. Our money was safe, but, not to say he didn't lose some money. He's got his money out there that he uses as, like, play money that's not super conservative. So, he definitely lost a little bit of play money, but, we didn't get too impacted by it, fortunately, just because, yeah. I'm trying to get my dad on here. I have a conversation with him and his compliance department. Tomorrow, where basically, I'm not a financial advisor, I can't give you guys advice, but I think it'd be awesome to bring in an actual financial advisor who could answer some questions for y'all, and has over 40 years of, experience under their belt. Let me know if y'all would be interested in that. Give me a 1 in the chat if that would be something you're interested in, just so I can kind of gauge the room. There's not a whole lot of us in here to begin with, but I think that'd be dope. Oh my God, Savvy, never change, my friend. Here's what I'm doing over here. Sorry, I was looking at the screen right now. It looks like, I'm sure. All right, we we got 3 ones in here. I will definitely bring that up then when I talk to the compliance department, see what we can do, see what we can talk about on here, because they are very, very stingy. That's why I don't want to be a financial advisor myself. Is like everything has to get approved by the compliance department. Huge pain in the ass. Even private investments. But I understand it. It's a very crooked industry in general, so you need to have a lot of parameters in place to make sure that you can keep people in check. Make sure that corruption doesn't take place, or if it does, it only happens on Wall Street. Alright, we got 4 ones up in here. I can definitely bring it up now. Oops. Exactly. Everyone's got to smash that like button if they haven't already to make that happen. Job, you were in here late. I don't know if you're in our Discord already either. I do have this sheet that I'm working on published on my website now. So if you want access to it anytime, just hit me up on any of my links in the description below, and I will take care of you to make sure that you can access this sheet and this data, whether I'm streaming or I'm not streaming. I've got that hosted live for free for y'all. If anyone wants access to that and they didn't catch it in the beginning when we went over it, just let me know. Again, hit me up on any of the links in the description below, and I will take care of y'all. Y'all are dope for being day ones. Before y'all know it, our stream is going to be well above 100 subscribers, well above 1,000 subscribers. We're going to have thousands of people up in here, all the moderators. Y'all are the day ones, and I'm excited to grow with y'all. That's what this channel's all about, is growing together. So I don't know if this is a true competitor. Aaron, that's maybe someone, I mean, you guys can see if you like my dad or not, but that's what he does, is he does like retirement planning, typically through IULs, like Index Universal Life Policies. Okay, Job, sounds good to me. Savvy, can you grab the free Discord link for our friends in here so I can post that up top as well? Because I don't think I have the free link in there. I only have the paid version in there, but there is a free version of the Discord as well. You just don't have, there's like 40 plus channels in the premium one, but you guys don't need to join that if you don't want to. So, Savvy, if you can grab the free one for you, for us, that would be dope. Yeah, so he typically does the he does retirement planning. That's his clientele. That's who he's been taking care of for a long, long time. So he puts it into conservative growth plans where you can only go up, you can't go backwards. I'll have him elaborate on that if we can get this cleared. But first, I want to make sure that we can get this clear with this compliance department. Find out what we can and cannot talk about. And yeah, I just think that'd be dope for everyone here, myself included. Got a lot to learn. See, I don't know if any of these are true competitors. That's the thing. see if we can do this. Last mile healthcare delivery. Thank you, Savvy. You are the man. Oops. Okay. Oh, appreciate you, Savvy. You are the man. Thank you as always, my friend. Also, I love that the video on the fire blanket PSA that you put up there. Always trying to hype you up on there too, telling people they don't call you Savvy for nothing, because that was actually a very, very cool play to see. I guess it was a nice ROI. You spent a few dollars on your fire blanket, and it potentially saved your house. Hmm. Welcome, welcome, welcome to any new viewers who just popped in here. If you haven't already, please, please, please smash that like button, smash that subscribe button, and ring the little bell next to it so that you can get notified every time we drop new videos, every time we go live, and we're making money up in here, which is every single day the market's open. Ask them. Last 2 weeks, where have all the other streamers been? They've been napping. They've been sleeping under a rock. They've been scared. George, great to see you in here, my friend. Where have we been? We've been here. We have not been losing money. We've been making money while everyone's losing money. That's what we do on this channel. We grow together. And we find opportunities in the market that exist before anybody else is talking about it. So looking to do here, but I can't find enough information. Brogan, great to see you. Good morning, my friend. It's 12:30. I'm gonna check one more link, and if I can't find any competitors, we're just gonna have to move on. Let's see. Lafayette, Louisiana-based startup announced that they have entered the last mile delivery service business with the launch of Presto Health, currently in pilot phase. I think this might be the only company actually in the sector, and they're making money. This could be a good opportunity here. I don't know what do you think, Savvy? Copper and commodities? I've never looked into copper investing. Typically, commodities, I've really familiarized myself with gold. Gold even over silver, because I've been preaching. And I think that I want to be very careful in what I say here, because my thoughts are still fresh. I've been watching a lot of stuff, by the way. If you guys are interested in learning the same way that I am, I like to learn about everything. Brogan, you were there last week. Appreciate you. We're going to be basically continuing our discussion from last week and diving into a new, or I guess diving into one of the topics we discussed last week a little bit further. This is Clubhouse, by the way. If none of y'all are on Clubhouse yet, awesome, awesome app. You get to hear basically it's like Discord, but you're popping into like voice channels, so people are just talking about whatever the topic of the channel is set to. So this week we're doing, I run a club called Teach Us Something Cool. So we just talk about cool concepts. We talk about cool concepts, around the world, very different, anywhere from Bitcoin. In the very beginning, we talked about space. Last week we talked about the looming market crash, and this week we're going to be talking about Japan in the 1980s, and in their what's often referred to as the lost decade in Japan. So that was 1991 to 2001. Some say 2003, and some say that we're still continuing to see that today, because Japan was on the verge of becoming the world powerhouse when it came to economic markets, even surpassing us. People were calculating when they were going to pass us up. So we're going to be talking about that tomorrow night. That's Wednesday. Savvy, I know you won't be able to make that because this is going to be 6 hours ahead of your time there. We do that Wednesday nights at 9:15 p.m. Central Standard Time. So we just talk about cool concepts in there. That's what we're talking about tomorrow. If you guys are interested, hit me up as well in any of the links in the description below. Happy to get you an invite to that. So our club is growing fastly over there as well. But Brogan was there last week. Appreciate you showing up, Brogan. If you ever have anything to say in there too, you're a very smart guy. So just raise your hand. I'll call you up to the stage, and you can elaborate on any of the concepts in there or anything we're talking about. Let's see, what did you say, Savvy, earlier? You filled a bunch of the gaps for me while I was gone. I have not seen them in London yet. What's this? Let's see. There we go. So .go, this is ambulance savvy. Like that they are due to be profitable and also do ambulances, but I question why they only cover 24 states, myself included. Let's see, there are lots of talk. It's crowdfunding. When to do the next teledoc. On the stock on Friday, that was a 10x Monday morning. Sold today. Congratulations, job. Fantastic job over there. position. Deeper dive. Japan released mega bonds and sold them. Yes. Speaking with Leonie says warning about Africa and Vietnam and investing in emerging countries. Worst case, if further DD turns up nothing on OTM, we can request $10 back. If it does, we get cheap. Just before they can become. Yep. Awesome. That'd be awesome to see you in there, JC. We have a lot of fun in there. We talked from about 9:15, like 9 o'clock. We're kind of just shooting the shit. Getting the room warmed up. Just kind of talking to each other because it's a lot of people from our extended networks who pop in there. A lot of very, very smart people in there as well. But yeah, just talking about very interesting concepts. At 9:15, we'll get that thing going. I do the moderating, keep us on topic. We have a Discord for that one as well. I think that's in my links in the description below, also in my link tree. Where I'll be, we kind of crowdsource it like Joe Rogan does his podcast, right? We're sending links in one of the channels just called Links and Resources, so that whatever we're talking about, if you want to follow along or you want to learn more about it, either then or later on, we're sending links that will, allow you to dive further into that concept or into that topic when you so choose to. So yeah, slowly building that up. This will be our 4th or 5th week now. We just got approved because I've been, pretty active Clubhouse member. I just got approved for a club this past week, I think 2 or 3 days ago now, and approved for their beta program, or invited to their beta program, so I get to see their new features before they go public, which is dope, especially because that was my first company, we made an app, and the beta is the fun part. That's where you get to test stuff out. You just got to know that you're part of the beta. All right, let's see. We wanted to talk about Kathy Woods, right, and what her take is on. Let's see. Kathy Woods. Oh, I'm trying to scroll up right now. It's not letting me. Basically a V-shaped recovery. Okay. Let's pull this up. Let me read into this. I'll be able to give you a more well-rounded answer on, what I agree with that she says, if I agree entirely. Like I said, Kathy Woods is top of the line right now. Kathy, Warren, very, very similar investing concepts, but she's very targeted in innovation. Any of her ARK ETFs you can't miss on this year. Even my dad was bringing it up, like he's invested in oh man, I'm not an insider. I don't want to be one. Even my dad's invested in ARK. I can't remember. I think he's in ARK N. Maybe he's in ARK K. Oh yeah. When Open recovers, it's gonna go zooming. Like my outlook on Open is, if you look at the graph, or look at the chart. Sorry, it's up, pull back, up, even higher, pull back, and we went through a nice consolidation period, and we took a dip. And so I think we need to work our way back up to that consolidation, resistance line now, and make that our support again, and then we're going to go zoom in past 40, I believe. UK, the Scottish Mortgage Trust, the mirrors ARK K. Really? go. Arcs Innovation ETF, Kathy Wood, Arc Innovation founder and portfolio manager. Oh my God, don't make me subscribe. Don't want to make a free account. Your high-flying ETF just entered a bear market. All right, chill the fuck out. We are not in a bear market just yet, my friends. But you gotta remember, sorry if this offends anyone here, but the news industry, it's a dying industry. So they make their money off of clicks. If they don't get clicks, they don't make money. I would love to read on this, but everyone wants to make money off my clicks right now. EV market's up again. Fantastic. Yep, that's what we expected, right? As soon as the stimmies passed, they got those tendies going into the economy. People have some more security, some more certainty in the market as an entirety. Money gets flowed back or flooded back into the economy. Economy goes up. Stock market goes up. That's why we print money. We're at a very healthy, from what I've seen so far, we're at a healthy inflation percentage. Typically 2 to 3% is healthy. And our GDP, we got to make sure that our GDP grows according to, or along with our inflation. If we pump money into the market, we need to be making more money. That's what we do as a company too. Think about our country like a company. Why do you shoot a bunch of money back out into the market, or why do you have an offering for more shares? Which is how you can look at this, I guess, would be to get more money so that you can create more growth for your company and scale even higher. That's what you're looking at here. When they release these stimmies out there, look at it like an offering. It's like we're all eating out of that same pie. That's the GDP. What are we producing a year? We have all these stimmies. We just released 1.9 trillion more of our papers into the economy. Those are more shares. Commodities would be dope to discuss too. I would definitely discuss some commodities with you, JC. We can definitely do that. Maybe this week, honestly. But that's the way I look at it. The country. I think the country needs to be run like a company. And when they pass these stimulus bills, they release 1.9 trillion more dollars in the economy. Those are just 1.9 trillion more shares in all the paper that we have flowing around right now. Those are all, each piece of paper is just a piece of that entire pie, right? So we just got to make sure that our pie is growing as we at a higher rate than we're printing more shares for. Otherwise, those shares become inflated. They're not worth as much as they used to be, and that's when things start to get bleak. See if we can find anything on here that's going to let us read for free. Nothing has gone wrong with her Tesla Model S since she bought it. Oh my God. You gotta be kidding me. Show me a different question. Nice. Kathy Wood says nothing has gone wrong with her Tesla Model S since she bought it in 2018, and she has never required a service call. She's just an investment in Tesla shares. Okay. Hmm. Yeah, I agree with it for the most part. And from what I'm seeing in this article, JC, I don't know if you have any other insights or takes beyond what I see in this, but I can't find anything besides for the Business Insider ones that make me pay for it, and I don't want to pay for it or set up an account with them. I think that her outlook is pretty spot on. She's got the right mentality also of, a correction or a crash would be an opportunity to load up on more of those equities that she's trying to, uh, obviously own more of that she believes in. She believes in Tesla for a reason. I believe in Tesla. I just don't believe in Tesla at this price at this point in time. Not to say that they won't be worth this one day. I think that before Tesla's going to be worth what we see it being worth, I mean, when we first started this, it was already soaring. Let's see what they're doing today. Tesla stock, what's their market cap at? They were at almost 800 billion. Yeah, they've climbed just as quick as they fell, and that's what we knew was going to happen. Um, when the crash finally does come, whenever that be, Tesla's going to fall again just as hard, or if not harder, than they fell over the last 2 weeks. You saw what 2 weeks of a bear market does to companies that are built up on speculative growth. And look at this, over the last 6 months, what Tesla's done. They've gone soaring. 1 year, let's see what they've done. Soaring, right? It's just straight up. And you can't maintain that. You can't do $31 billion in revenue and have a market cap of 650 billion. I mean, obviously you can. They had one that was near 800 billion when I did my first write-up on them, and in our sheet you can see that on the website also. If you need help making that account, by the way, let me know. I know that a lot of you missed it, but if you go on my website right now, uh, this is free for y'all. But I want you guys to be able to use these sheets as I update them. You can just scroll through here. It's not formatted exactly as I want it to be. I'm working on making it better, but this is just an MVP version so that y'all can see it while I work on making a better version of it. So yeah, scroll down here. You'll see Tesla somewhere down here, right there. This was on February 16th we did this. They were trading for $796 a share, which was down for that day. From 816 the previous close, gives a market cap of $764 billion for a company who just had their best year ever. They've got healthy assets, they've got healthy levels of liquidity. They did $31.5 billion in revenue in 2020, and this is obviously their best year yet. This was in 2019 what they did, almost 25 billion, so they did quite a bit more. And then if you look at their income, this was their first year that they were profitable. They made $721 million, so it's a low profit margin on there. But first year that they've made money. So yeah, 2019 on about 6 billion less in, almost 7 billion less in revenue, they lost $862 million. So that's a nice swing for us. We're profitable now. But that still doesn't justify a market cap of 800 billion. And you saw what happens. The companies that are built on speculative growth, my companies for the most part, like Opendoor, I know took a hit. I think it's still undervalued at this price. I anticipate that it's going to make a bounce back, but I'm up so much on Opendoor as is because we got in early, which is what we aim to do on this channel, right? We aim to get into these companies as SPACs. That's what I try to do, at least buy warrants on them so I can really lever up that way really easily, and I can afford to take hits like that when the market takes a crash. I got in early enough to where I was largely unaffected. My returns might be less than they were a week or two before, but that's okay. I'm still up way over 100% on them. Tesla though, yeah, if you got in early on Tesla, you got nothing to worry about. But when they were trading at this, it came tumbling down, and now it's making a recovery back up here to where we're almost at $650 billion at 672 bucks a share. Mr. Ainsworth, how you doing, my friend? On uranium right now is what Brogan says. Okay. There's another billionaires have been buying up hundreds of acres of farmland. By the way, if y'all haven't already, please smash that like button, smash that subscribe button, and ring the little bell next to it so that you can get notified every time we drop a new video and every time we go live and we're making money up in here, which is every single day the market's open. But yeah, that 2-week correction that we just went through, and I think it's over now. I think we're gonna go back into a green period. We needed 2 weeks of correction, to be honest. I thought we could have honestly used another week or so of it to be a little bit healthier. But I think it's over. That was just a little taste of what would happen if the market were to crash. Tesla wasn't going to stop at $500. Tesla would continue falling until their, speculative growth got wiped out of the company. And yeah, at that point you can buy in like Kathy wants to, for a fraction of what she would otherwise. Do I think that it could hit $650 billion of value one day? Yes, but I think we're going to see a crash in between now and then where I can load up on Tesla shares if I so want to, for a much cheaper price, for a bargain compared to $675 today. I'm not going to buy in here and wait for it to fall and then ride it out. I'm going to, wait for the bottom. I love Tesla as a company, just not at this price right now at this point in time. So that's my take on Tesla. I think her head is in the right place, and she's been long Tesla for long enough now to where she can afford to take hits like these. Long Bitcoin, oil, Forex. I'm long Bitcoin as well. Think we're heading toward a central bank digital currency replacing the dollar. So a major disruptive effect globally, very high interest rates causing a depression. If interest rates go up, that's another sign that we're heading for a crash. That's what happened in Japan also, because these people that are overextending themselves right now when interest rates are stupid low, as soon as the government raises their interest rates, that these banks and other institutions, private institutions, need to borrow from them at those interest rates, because we don't see those. They need to borrow at a higher interest rate now, so that means that they need to charge their, as a lender, they need to charge their borrowers a higher interest rate as well. And at that point, they can't pay it back. The economy goes into a just big old crash. It becomes stagnant at first, and then it's just going to go down to the bottom. I think that we are further away from that than I initially thought, even as far as yesterday. So I think we've got quite a way to run right now. And if you would have asked me last week, I thought that the crash would be closer. I'm just trying to find one more SPAC that we can go over. Just because we got Mr. Ainsworth in here, we got a celebrity in his house. Brian, if you haven't already, please smash that like button. And smash that subscribe button if you haven't already either. Okay, so BTWN. This is a Peter Thiel one. And I don't remember if they have a target yet. I think they've already done some running. Tokopedia, right? Yeah. Has this been announced though, or is it just still rumored? This would be one of those GSAH. That's Goldman Sachs, right? We want to make sure that we're focused on SPACs that have a definitive agreement in place. Oh, you the man. Thank you, Mr. Ainsworth. After all of these jobs have worked throughout Texas, but making money while the market. Where are you at in Texas, Ryan? Okay, so I don't see target announced yet. I'm not sure why the chat stream is not working or not moving. Thank you for bringing that to my attention, though, JC. Okay, so let's wait. We gotta wait just on that one for now, because I do want to evaluate whenever their merger gets announced. I do want to evaluate that company. We just need to wait for an investor presentation because right now there's really not enough for me to go off of. Like I have a few companies of mine that are in my private radar that just don't have any actual merger target announced yet. So I can't do any DD on them until then. When they release the investor presentation, that's when we get some more information on these private companies. Piney Woods of East Texas, okay, 2 hours north of Houston. Let's see. Trying to see what cities I would know by you. Yeah, I'll look at that at a different time. I don't want to document exactly where you are for everyone watching right now. Oh yeah, I see my boy Shamoth getting trashed on these boards too. Put out something the other day. I don't have enough karma points on Reddit yet though to actually comment on stuff. But yeah, people trashing Shamoth right now. I have no idea what they're talking about from what I've seen. If they're convinced he sold his entire share of, or his entire stake of Virgin Galactic, not true. Oldest text. Okay. Gotcha. You have a lot of friends out from the Houston area. That's the only one that has a definitive target announced. I don't invest in pre-target SPACs. Just because I have no idea what company I'm investing into, what terms I'm investing into, and again, I'm not going to harp on it again today. Y'all saw what happened to CCIV. I said Lucid Motors is a fine company. They make cool-looking cars. But we have no idea what the terms of the deal are going to be. And when the terms are bad, you're going to lose a lot of money. Can we just do QELL? No, we must have not. Should we do QELL? Austin. Okay, that's where I was. I was in Austin when I lived in Texas for school. So I was there for 3 years. Nope. Williams, not right. We really have no other mergers being announced? That surprises me. Yeah, there's no DA yet. Savvy, we were still there. There's one we can look at. AACQ, ACE. I think we have those on here. No, we don't. Okay. Oh, Ryan. That's what I wanted to show you guys. I don't know why I got off of this. You can go on here, make an account on my website, Ryan. You can see everything you want to for, I've got public, SPAC, OTCs. Obviously, I don't do a whole lot of OTCs on here just when people, request them. Just because they don't typically have good financials. I don't have really much to share with you there. So GHBI, Matterport, and you can see pretty much everything you need to there. I don't have really any extensive notes on them. This is current as of 25th. I don't know what they're priced at today. GHBI. I'm stalling my computer. I got too much stuff going on it. 5048. I like Gores a lot just because, you know, GMHI obviously brought Laser public. Laser is in Luminar. I made a very nice return on that one so far. So I like Gores Metropolis. I like the idea that this company has. Matterport. I don't think I left any detailed notes in there though. Let me update this sheet and see what kind of numbers we're looking at now. So this was at, let's update this for 3/9/2021. This was at $15, and let's get the most recent one. So it's going to give us our, yeah, I saw SoFi. Brogan, let's talk today. I messaged you in Discord. Give me some time that you got for like a video chat, just because, like I said, your capabilities are much better than mine. And yeah, I have not done IPOE SoFi. That would be a good one for me to do, huh? Let's do it. Yeah, this is my MVP though. You know, minimum viable product. I wanted to get this out there for y'all since I've been trying. You know, it doesn't have to be perfect at first, but at least now y'all can see it. You know, while I continue working on making it better. You know, hopefully with people like Brogan. You know, that's the best thing about this community is that there's so many talented people in here that are, you know, willing to help. You know, any way possible. Brogan is very, very talented, very, very ahead of his curve for his age for sure. And even if he can't help, you know, he can point me in the right direction, most likely. You know, there's probably going to be some code involved here. So no pressure, Brogan, but let's do a video call and see what we can come up with. GHBI, though, I need to get the most recent price possible on here. 1557 gives us a market cap of, let's do this one. And then we'll do IPOE and then the end for the day. 1557 gives us a market cap of 671. Okay. Market cap is 671,456. There you go. So currently at 4.5 million or 4.5 billion market cap post merger. Enterprise value, realistically, you want to go off equity value just because all this cash is being infused in the company. 2.9. I'm looking for anything that's like a 2 to 3 multiple of what their equity value of the company is after this merger is completed. That's what I consider to be healthy. Open Door is definitely within those bounds still. You know, they're starting to be public right now. So Open Door has currently got a price to book ratio that is only like 2 times what the I'm sorry, the current price of it is only 2 times what the price to book rate or price to book value per share is. You're looking anything under 3 is considered undervalued. So we'll wait for it to catch up. That's public though. Private, 2 to 3 times this is healthy to me. You can see we're not even 2 times that right now. So you know this, you still got more than enough time to buy in there if you believe in the value of the company. I think the company's doing a lot of really cool things. Only did 46 million in revenue for 2019. This is for 2025. They're expecting 747 million. So you know you got 5 years of you know growth you need to hit your benchmarks for in order to achieve that. This was one of the first ones I did, so I didn't have any of these in there. I can go back and touch it up later. So GHBI, I think it's a really cool concept. I like Gores Metropolis as a fund. But yeah, I mean, I think that what they're doing is going to be the future. I just forget. I don't have enough information on it. I'll have to go back and do more of a write-up for y'all to get a better idea of it. So let's do IPOE really quick. Oops. IPOE, this is SoFi, this is FinTech. sites that you guys can do that on is just growthsaloon.com. Scroll to the bottom, create an account. It's free for y'all. I don't know when I'm gonna put a paywall up. You guys will never have to pay though. It's just when, whenever I have to upgrade my servers because I have too many people on my site. I'm trying to do this for free as long as possible. When I need to upgrade my servers, that's when, any additional people from that point on will need to pay. But you guys will never have to pay. That is my vow to y'all. Let's do IPOE. Let's do that. Let's pull up their investor presentation. Yeah, I love Chamath, Aaron. Anyone who has been watching me since I was streaming on Burner's channel also, I love Open Door. So that's a Chamath play. Sorry, I'm catching up on messages right now. I love Open Door. That's a Chamath play. I love Chamath in general. I've been following him since 2016 when I first got into entrepreneurship. Download this. Go back to download. Chamath he's brilliant. You might call me a fanboy. That's fine. But he's been someone I've looked up to since 2016 when I first got into entrepreneurship. He's done this before. He knows how to grow things. He knows how to grow companies very well. People belittle what he's done and what he's accomplished. He was in charge of user growth at Facebook from the first year onward, and I think all of us have Facebooks. He was in charge of growth at AOL, specifically for the AIM sector. I think all of us probably had AIMs. He knows what he's doing. So whether you like him as a guy or not, he's going to grow companies, and he's going to do it whether you're on board with him or not. That's all I'd say there. So if everyone gets off the Chamath train, let him go. I'm going to keep making money because he finds great companies that aren't too far in the future, that aren't, they're doing things that are in the future, but in the immediate future where we need to progress to. And they're doing it, they're making money already doing it. So that's what we're looking for when we're investing in anything. I want to be making money today. I don't want to be making money 3 years from now. I want to have dollars coming in now, because if we go through a crash, the companies that are banking on revenue 3 years from now, toast. Okay. What's this? Oh. Okay. Let me see. Pull this over here. I need to start plugging and chugging some numbers. We are in FinTech. IPO's price, or IPOE's price right now. Let me see if they give us a market cap with it. They do. Cool. $17.97. That's today's price. Today's current price when I ran this. Yesterday it was $16.11. Market cap at today's price is that. This is current as of 3/9/2021. Now let's go find our transaction overview on here. That's going to give us all the numbers we need to understand what we're investing into, what percentage of the pie we're getting, all that good stuff. Okay, so this is the enterprise value that they're giving the company. I'm not seeing it. I'm seeing I don't want the equity value, I want the enterprise value. Give me a second, folks. I gotta find the enterprise value. Yeah, I mean, look at Buffett. You know, he has his losers too. I didn't buy into Clove just because I didn't see anything that really made it stand out to me. I think healthcare is still ripe for disruption. It could be Clover, but they have a lot of um, bad press around them, to put it lightly. So I don't, I never bought into IPOC. Probably could have made some money in the interim with them, but I love Open Door. Um, let's see, you have IPOE, IPOD, IPOF. I know IPOD and IPOF don't have merger targets yet. I think that, depending on whatever price you got in, I think that's a very, very smart hold for you, because as soon as something is announced, whether people like Chamath or not, it's likely still going to balloon upward. And then MP is my, one of my favorite companies that I still don't hold, just because I don't have the liquidity to get in there at a fair price right now. I'm plugging anyone I can, who's got liquidity to invest into companies and are looking for companies to invest in. MP, just look at what they're running over there. That's all I'll say on that, because I think most people in here have heard me harp on MP Materials. The only rare earth materials mine in the United States. All the other ones come from, like 85% of the rare earth materials come from, either China or the Southwest Pacific countries, and then in Oceania, Australia. So, yeah, the rare earth materials, though, everyone's big on the EVs, this EV train right now. I do think EVs are going to be all over the place in the next 10 years. I'm on board with that. So it's just a matter of following the supply chain, or the supply of demand. Yeah, the chain of demand. Sorry. If you've got all these EVs, what do all these EVs need to, be functional? They all need batteries. So everyone started investing in the battery companies. Everyone started investing in the charging companies. You gotta get ahead of the curve. Think one step beyond there. That's what I love about Chamath. What do all these batteries need? Well, they need the materials required to make them. Well, where are they getting the materials from? They can either import them for the high, costs from China or any of the other companies who run monopoly right now, or you can get them domestically, from MP Materials without paying the import fees and taxes, and it gives the U.S. a share of that market. So the government is currently backing them also. MP Materials is not going to let them fail, because if they let this company fail, then they have to get all these materials for all these vehicles traveling around their country in the next 10 years. China's got a stranglehold on that market then. You don't want that. That is not a world you want to be a part of. Your cars are going to get stupid expensive. That poor stock of oil, I got burned with that one like 10 times. So many valuable, expensive lessons learned there. You paid a fraction of what people are paying in business school to learn this. So, maybe. I don't know how much you lost. I don't know your personal finances, so I should make assumptions there, I guess. I can't find enterprise value over here. I'm only seeing equity value. Momentous, I'm not sure what that company is. Are they a SPAC company? Are they public? Let me look up SoFi's enterprise value really quick, see if I can find anything. Well, I don't see anything for them, unfortunately, for this, so I'm just going to go ahead and put, nothing for right now. We're going to do what they've got for their equity value. Boom. What percent of the pie are we getting? Not a lot, but not small. 9.3. 2.3 for the sponsors and founders. Gives us a post-merger adjusted market cap of $15.6 billion right now. So if you agree with that value of them, 8.6. This is not even double that right now. This could be a good opportunity. Excuse me, good opportunity for you. It's coffee. Gets you every time. Let's see what kind of revenue they're looking at, though. So for 2019, they did this. 451. This is going to be in thousands, I'm assuming. Yeah. So 451, 329,000. That is for 2019. Then they're expecting on that, were they profitable? They were not profitable. Yeah, they lost like 200. They brought in 451 million. They lost 239 million on that at the end of the day. But that's what the price you pay for growth. Same concept we talked about 20 minutes ago with the U.S. Running the U.S. as a company. Momentous though. Send me that on Discord, Ryan, just so I can look into that after this. Let me look up their projections real quick. 21, 23, 25 is what we'll do. Okay. They want to mine asteroids. Okay. Interesting. Definitely do not know enough about that off the top of my head to be able to rattle off anything of use for y'all right now. As long as I need to do some independent research there before I really develop a I guess, put together opinion on it. That's 2023, and then 2025. And this is going to give us a CAGR. Let's go find that ourselves from 2019 to 2025. We're starting at 451, and we're growing all the way up to 3669. Thank you, Ryan. So we got, 2020, 1, 2, 3, 4, 5, 6 years of growth priced in there. $41.82. And that is 2019 to 2025. Our TAM, let's go find that one. Total addressable market, how big is our pie that we're trying to get a share of? Up for grabs, 500 million plus accounts. Okay, money-wise though, what are we looking at? Member growth is improving year over year. Love to see that. Yeah, multiple products in there. Love that. I'll pull this up for you so you know I'm not just staring at you. Ask any questions you want in the chat. I'll try to respond, but I'm trying to find this. Pay no mind to the EBITDA. Gotta remember, those are going to be skewed in their favor heavily. That is where subjective pricing comes in there. We want to look objectively at the company. You know, make up our own room for subjectiveness. I don't see TAM anywhere on here. So we're going to become profitable in 2023 by these calculations. No. That's disappointing. That's cool too, though. They're valuing the company based on a multiple of the net income. Typically, you'll see companies get valued on a multiple of the revenue. So that's nice to see. It's based on 2024's revenue or net income and 2025's net income. That's what their multipliers are based off of. I don't know. I'm gonna have to do some digging over here and see if anything pops up. We're gonna put. We don't have that, so we need to find the competitors next. We're quickly gonna put. I'm gonna put my private one in there. I'll put the Dropbox one in there for y'all to download if you want it. Boom, boom, boom. Student notes. Alright, what else do we like about them? Shit ton of money. There you go. So I don't know what their TAM is, unfortunately. Let me see if I can find some competitors for them. Ernest Lemke. Oops. I don't know if I know any of those. Upstart. Okay, let's go find their partners. I'll have to do some more independent research over here. Let's see if I can find it in here if I do a quick scroll. Otherwise, I'll probably be ending this, right after. I'll put Shamoth as like a notable person touching them. Galileo, okay. That's all I know for right now. But alright folks, that is all the time I got for y'all today. I believe TC should be starting to stream either now or, if he's not already, relatively soon. If you guys have any questions, my links are in the description below. I'm in the Discord. Make sure you tag me in there. I get a bunch of notifications every single day. Preferably private message me on there. I answer every single private message I get, so that would be ideal. Or contact me on any of the social platforms below. That is also where I'm easily accessible. So other than that, I appreciate y'all for tuning in again today. Y'all are the best. 14 likes in here. That is the highest we've hit yet. I believe. I'll have to double check that fact. But yeah, y'all are the bomb. If you need help getting access to that sheet later today on my website, I can definitely help y'all out there. But I know it doesn't look pretty right now. It'll look a lot better as we continue to go along. I just wanted to get that out there for y'all, so you'd have access while we're working on making it better. Other than that, y'all have a great rest of your day. If you haven't already, please smash that like button, smash that subscribe button, and ring the little bell so that you get notified every time we drop new videos. We go live, and we're making money up in here, which is every single day the stock market's open. All right, folks, with that being said, y'all have a great rest of your day. I will see y'all tomorrow morning around 10:30 a.m.